Hey everyone, and welcome back to the channel. With 2026 just around the corner, many of us are probably thinking about our financial goals. Maybe you want to finally buy a house, pay off that student loan, build a solid retirement fund, or just feel less stressed about money. But let's be honest, how many of us set these goals year after year, only to see them fall by the wayside? It's a common story. We start with great intentions, but life gets in the way, and soon we're right back where we started. The problem isn't that our goals are too big or that we lack willpower. The problem is often our approach. We rely on vague wishes like "I want to be rich" instead of creating a concrete, actionable plan. Today, we're going to change that. We're diving into an evidence-based step-by-step framework to not just set your financial goals for 2026, but to actually achieve them. This isn't about magic formulas or get-rich-quick schemes. It's about psychology, strategy, and consistent action. So, grab a notebook, and let's build your roadmap to financial success. The first and most crucial step is to get crystal clear on what you truly want. Vague goals lead to vague results. Instead of saying, "I want to save more money," you need to be specific. How much money? By when? And most importantly, why? This why is your emotional rocket fuel. It's what will keep you going when things get tough. A powerful goal might be, "I want to save $20,000 by December 31st, 2026 for a down payment on my first home, so I can have a stable and secure place for my family to grow." See the difference? It's specific, measurable, time-bound, and deeply personal. Psychological research shows that goals connected to our core values are far more likely to be achieved. So, take some time for self-reflection. What does financial success actually mean to you? Is it freedom, security, the ability to help others, the opportunity to travel? Write it down. Your why is the foundation of your entire plan. When you're tempted to make an impulse purchase, you can ask yourself, does this get me closer to that home for my family? This simple question can be incredibly powerful. Once you know your what and your why, the next step is to break it down. A big goal, like saving $20,000, can feel overwhelming. It's like trying to eat an elephant in one bite. You need to slice it into manageable pieces. This is a concept called chunking, and it's essential for maintaining momentum. If your goal is $20,000 in a year, that's approximately $1,667 a month. Still sounds like a lot. Let's break it down further. That's about $385 a week, or $55 a day. Suddenly it feels much more achievable, doesn't it? Saving $55 a day seems a lot less daunting than saving $20,000. You can identify exactly where that $55 can come from. Maybe it's skipping that expensive daily coffee and lunch, canceling a subscription you don't use, or picking up a few extra hours at work. By breaking your goal into daily or weekly targets, you transform a distant dream into a series of simple, daily actions. This process creates a clear path and gives you a sense of control and progress from day one. Now that you have your small, daily actions, it's time to build a system that makes them automatic. Relying on motivation is a losing game. Motivation is fleeting. It comes and goes. Systems, on the other hand, run on autopilot. For financial goals, the most powerful system is automation. The moment you get paid, have a portion of your income automatically transferred to a separate savings or investment account. Don't even let the money hit your main checking account where you might be tempted to spend it. Set it and forget it. This is the pay yourself first principle, and it's a cornerstone of wealth building. By automating your savings, you remove the need for daily discipline. You're not deciding whether to save or not. The decision has already been made for you by your past self who set up the system. You're essentially creating an environment where your default behavior is the right behavior. Check with your bank or employer. Most offer easy ways to set up automatic transfers or split your direct deposit. This single hack can be the difference between hitting your goal and falling short. With your system in place, the next crucial component is tracking your progress. What gets measured gets managed. You wouldn't try to drive across the country without a map or GPS. So why would you try to reach a financial destination without tracking your journey? Seeing your progress is a massive psychological motivator. It reinforces your good habits and shows you that your efforts are paying off. There are tons of great apps out there, like Mint, YNAB, which stands for You Need a Budget, or even a simple spreadsheet that can help you do this. Find one that works for you. At the end of each week or month, take a few minutes to review your numbers. How much did you save? How much did you spend? Did you hit your weekly target of $385? Seeing that savings account balance tick upward is incredibly rewarding. It creates a positive feedback loop that makes you want to keep going. It also allows you to correct. If you had a tough month and fell behind, you can see it clearly and figure out how to get back on track, rather than realizing it 6 months down the line when it's too late. Now, let's talk about something that derails more goals than anything else: unexpected setbacks. Life is unpredictable. Your car might break down, you might have an unexpected medical bill, or you might lose your job. These things happen. A rigid plan that doesn't account for reality is a plan that's destined to fail. This is why building an emergency fund is not just a nice-to-have, it is an absolute necessity for protecting your long-term goals. An emergency fund is typically 3 to 6 months' worth of essential living expenses, kept in a separate, easily accessible high-yield savings account. This is not your investment money or your down payment money. This is your life happens fund. When an emergency strikes, you can tap into this fund without having to derail your progress towards your primary goal. You won't have to sell your investments at a bad time or rack up high-interest credit card debt. Having this buffer provides immense peace of mind and makes your entire financial plan more resilient and If you don't have one, make building a small $1,000 starter emergency fund your very first priority before tackling anything else. So far, we've focused a lot on saving, but to truly accelerate your progress, you need a two-pronged attack: cutting costs and increasing your income. There's a limit to how much you can cut. You still need a roof over your head and food on the table. But there's theoretically no limit to how much you can earn. So, while you're optimizing your budget and automating your savings, start thinking about the other side of the equation. Can you ask for a raise at your current job? Brainstorm ways to add more value to your company and then present a data-backed case to your manager. Could you start a side hustle? We live in the age of the gig economy. You could drive for a rideshare service, do freelance writing, manage social media for small businesses, or sell crafts online. Even an extra few $100s a month can dramatically speed up your timeline. When you earn extra money from a side hustle, the key is to earmark it directly for your goal. Don't let it just get absorbed into your regular spending. Create a rule: all side income goes straight into the house fund or the retirement account. This is how you put your plan into hyperdrive. Finally, and this might be the most important part, you need to surround yourself with support. Achieving ambitious goals is tough to do in isolation. We are social creatures, and our environment heavily influences our behavior. Tell a trusted friend, your partner, or a family member about your goal. This isn't just about accountability. It's about having someone in your corner to celebrate your wins and encourage you during the tough times. This person can be your accountability partner. Schedule regular check-ins, maybe once a month, to discuss your progress. Studies on goal achievement consistently show that people who share their goals with someone they see as a supportive figure have a significantly higher success rate. You can also join online communities or forums dedicated to personal finance. Being part of a group of like-minded individuals who are on a similar journey can provide invaluable motivation, tips, and a sense of camaraderie. Don't underestimate the power of community on your journey to financial success. So, let's quickly recap the evidence-based framework for 2026. 1. Define your specific, measurable, and emotionally compelling why. 2. Break your big goal down into small, daily or weekly actions. 3. Build a system of automation to pay yourself first and make saving effortless. 4. Track your progress consistently to stay motivated and course-correct when needed. 5. Build a resilient plan by establishing an emergency fund to handle life's surprises. 6. Go on the offensive by finding ways to increase your income. And 7. Surround yourself with a supportive community and get an accountability partner. This isn't rocket science, but it requires intention and consistency. The journey to financial freedom is a marathon, not a sprint. There will be good months and bad months. The key is to forgive yourself for the slip-ups, learn from them, and get right back on the path. By implementing these strategies, you're not just hoping you'll reach your goals in 2026. You're building a concrete, evidence-backed system designed to make it happen. You have the power to change your financial future, and it starts today. Thank you so much for watching. I truly believe that if you follow these steps, you'll be amazed at what you can accomplish. If you found this video helpful, please give it a thumbs up and consider subscribing for more content on building a life you love. And I'd love to hear from you in the comments. What is your #1 financial goal for 2026? Let's support each other. Thanks again, and I'll see you in the next one.